Don't pass your tax burden on to your children. My name is Paul Vasquez with Tax Lab, and you need to become an ethical millionaire. Many of you have done a smart thing by participating in a 401k or utilizing an IRA. Unfortunately, when you did that, well, fortunately at the time, when you did that, you reduced your taxes, or really postponed your taxes on that money until after you retire. So it's going to grow tax-free, but when you take that money out, you're not being taxed at the capital gains rate. No. You are being taxed at the income rate on that principal and the growth. Now, if you live long enough, you may even be required to make minimum withdrawals. That means that you'll have to take some of that money out or lose it. You just give it all 100% tax to the government. So you have to take out minimum distribution after you reach a certain age. Now, and you'll be taxed on that as though it's income. Now, if you don't have any other sources of income, then maybe that's okay. You're paying what taxes you can on that, what you have to on that. But you could also use the charitable exception. So if you make those minimum distributions, charitable donations to a charity that you normally give to anyways, then that can help. But in the end, if those minimum withdrawals and everything else you've done don't reduce that account, then when it passes on to your children, they have 10 years to take that money out, which means that they have to make some withdrawals on that, and they will be taxed at their income rate for it. And depending on the age of your children, they may be at a time in their life when they're actually earning quite a bit and at a higher tax bracket than what you might have been during retirement. So what can you do? Well, oftentimes when people retire, they have a significant drop in income. You're not getting those W-2 wages anymore. You are living off of maybe Social Security and your retirement accounts. And so you may be at one of the lowest tax brackets that you've been at in a while. And those tax brackets may actually be lower than what your children's tax bracket might be when you pass on. So you can do this thing called conversions or rollovers and change that, make a deposit from your traditional to a Roth account. So there's no limit. When you were earning money, there's a limit to how much you can contribute to a Roth IRA every year. But when you retire, or at any time really, a rollover does not have a limit onto how much you can roll over every year. What you want to do is make that limit the next tax bracket up. So you want to kind of keep it within the same tax bracket that you're at, so that way you're not increasing your taxes unnecessarily. But if that tax bracket is lower than what your children's might be, it may be the best strategy for not just you, but your family as well. Because what happens when you roll that over? When you roll that over into the Roth, yes, you pay tax on it at that time, at that tax bracket, but then it will, from then on, grow tax-free, have tax-free withdrawals for the remainder that value is available to you and then your family or your inherited family in the future. So I just did this, helped my mother do this. We did 15 this year, rolled it over. And so we had the taxes taken out at that time, and both state and federal. And what's kind of nice about these rollovers is that you really don't feel it, right? It's not that you have to really take money out of an account that you've been relying on for making payments. You don't see that necessarily go down. And by making that rollover, now you've got some time where that can actually now grow and possibly maybe even replace those taxes at some point before you even get to using that money again. So just a quick, kind of simple tax strategy that you can apply in your life. Sounds complicated, I know. Sounds maybe a little intimidating, but that's where you get a partner. Get a tax advisor. Investment advisors can probably help you with this as well. And we can help as a team work together to make sure we're minimizing your taxes even in retirement. Go to lab.tax, and right there at the top now, free 15-minute introductory interview. This is where we kind of see if it's a good match for us to work with you. But whatever you choose, I wish you guys all the success.